How is Donald Trump doing with your money? In this part of the program, we look at the Trump presidency, not from a political angle. You get enough of that on your own time. We look at it from a personal investing, from an economic standpoint, and ask the question, how is Trump as president? Not that he's managing your money, but what's he mean for your investment dollars? Investing in a time of coronavirus, in terms of panic and pandemic, these are dangerous, frightful words for everybody. At the same time, we tend to think of the economy as just moving all in one direction. It moves in many directions all at the same time. What do I mean by that? Yes, Trump is president. He's presided over a very difficult period in world economics, U.S. economics, and some of the numbers are terrible. Let me go through what some of the terrible numbers are. Housing starts are way down, off about 20-25%. Manufacturing output down 15-20%. Unemployment way up. These are all bad signs for an economy. But are there good signs out there? Sadly, perhaps because it's connected with a pandemic and a virus, there are good signs out there. Inflation is below 2%. That's very good for anybody who's an investor. What about interest rates? Interest rates are at historic lows in many countries. What about the cost of buying a house? Well, if you were going to buy a house before the panic struck, that house is a lot cheaper today than it was 3 or 4 months ago. Does that mean that I think that the economy will rebound as they saw a V-shaped rebound, meaning it goes down and it goes up? That would be nice. I think it's a little optimistic. There's talks that maybe the recovery is U-shaped, that there would be a decline, a period of consolidation, and then a recovery. Another way to look at it is an L-shaped recovery period, which means it goes down and then goes sideways for a number of years, which is what happened in the United States during the Great Depression. My feeling about your money and your investments in the time of coronavirus is this. I would bet less on a U, V, or an L recovery, and I would bet on a W recovery, by which I mean there'll be periods of euphoria and there'll be periods of despair. And I think that will continue as long as we're in the climate of a non-vaccinated investment political world. So that can mean opportunities when people are feeling fearful, and it can lead to some euphoria in terms of people feeling that recovery is around the corner. To sum up, when you're investing in a period of virus, in terms of pandemic, in terms of crisis, try to commit your funds when others are fleeing the market. It's the only way you can find yourself really taking advantage of a situation over which you have very little control. What you do have control over is when you spend your money and how you spend your money. And I know it's difficult, but do the best you can to commit those funds when others are the sellers. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.